Hi, friends. Look at this girl. She just came back from an interview and she is just thinking that if I would have put some extra efforts, I would be able to clear my interview. Yes, a little bit more efforts and I would have cleared my interview. Hi, friends. Professor Joe here. I hope you all are doing great. Welcome to one another video. You heard it right. A little bit more efforts and that girl would have cleared her interview. That is the reason I'm creating these videos so that it can help you. Welcome to the second video in this series of banking interviews. Let us continue. So make sure that you stay till the end of this 20 questions and answers because there is another surprise with an aptitude test at the end of this video. This video is an RBI special. In a banking interview, what are the different kind of questions that are asked on RBI? So that is what we are going to cover in this video of this series. Question number 21. Can you explain the functions of Monetary Policy Committee of the RBI? MPC. Yes, Monetary Policy Committee. The answer would be the Monetary Policy Committee is responsible for setting up the interest rates. Yes, the interest rates for the entire economy. These interest rates helps in maintaining the stability in the economy. At the same time, supports economic growth. This is what the Monetary Policy Committee of RBI does. Next, what are the key tools used by RBI to control inflation in the economy? The answer to this is the RBI uses its monetary policy, like adjusting the repo rate, adjusting the reverse repo rate, keeping a control on its open market operations, and these things are done to control the inflation in the economy. Next, what is the role of Reserve Bank of India in the Indian banking sector? The answer would be RBI is the regulator and the supervisor for the entire banking system in India. It issues currencies. It manages our country's foreign exchange and formulates monetary policies to ensure financial stability in our banking system. Next, explain cash reserve ratio and its significance in commercial banking. The answer to this is cash reserve ratio is a ratio of the total deposits that is happening in a bank. The percentage is fixed by RBI. This reserve is maintained with the Reserve Bank of India. It also helps in maintaining the liquidity in the banking system and in turn controls inflation. This is the importance of CRR. Next, how does the repo rate impact the commercial banks and its customers? Answer, the repo rate influences the cost of borrowing for the commercial banks and in turn for its customers. Any change in the repo rate changes the percentage of interest in lending to the customers of the bank. So this is how any changes in the repo rate affects the commercial banks and its customers. Next, what is the role of RBI in promoting financial inclusion in India? Answer, the RBI takes initiatives to ensure that a large portion of the population have access to the funds available in the banking system. This is how it promotes the financial inclusion and in turn helps economic growth. Next, how does RBI manage foreign exchange reserve and why is it important? Answer, the RBI manages the foreign exchange reserve by buying and selling the required amount of foreign currencies. This is done to stabilize the Indian rupee, by which it supports international trade and also maintains overall stability in the economy. Next, what is the difference between a repo rate and a reverse repo rate? The answer is the repo rate is the rate at which commercial banks borrow money from RBI. And the reverse repo rate is the rate at which RBI borrows money from the commercial banks. Next, explain the significance of SLR for commercial banks. The answer to this is SLR is statutory liquidity ratio. SLR is also a percentage of the total deposits that happen in a bank. The percentage of SLR is also decided by RBI. This amount has to be maintained in the form of liquid assets in the bank, like government securities, treasury bills. It ensures solvency and liquidity of the banks. Next, how does RBI contribute to the stability of the financial system in India? Answer. RBI regulates and monitors the financial system in India. It creates monetary policies to make sure that the system is maintained well. These policies are made to safeguard the stability of the financial systems, and RBI acts as a lender of last resort to the financial system of our country. Next, what is the role of the Banking Ombudsman scheme introduced by RBI? The answer, Ombudsman is basically like a judge but outside the court. So the Banking Ombudsman scheme provides a platform for resolving customer grievances against the banks, ensuring fair and efficient redressals to customer grievances. Next, how does RBI addresses cybersecurity challenges in the banking sector? The answer, the RBI has established guidelines and regulations to enhance cybersecurity measures, ensuring the safety and integrity of the banking infrastructure. Next, RBI issues 1 rupee note. Is it true or false? The answer, false. The 1 rupee note is issued by the Ministry of Finance and it is signed by the Finance Secretary of India. Next, how does RBI support SMEs in India? Answer, SMEs means small and medium sized enterprises. The RBI implements policies and initiatives to facilitate credit flow to the SMEs, helping the SMEs to grow, hence contributing to the economic development. Next, explain the concept of PSL and its significance for banks. Answer, PSL, Priority Sector Lending, is a regulatory requirement for banks to allocate a certain amount of funds for PSL lending. PSL are sectors like agriculture, micro enterprises, and other specific areas given by the government. This is to promote inclusive growth. Next, what role does RBI play in regulating NBFCs? Answer, NBFCs, non-banking financial companies. The RBI regulates and supervises the NBFCs like they do for the banks. This is to ensure financial stability, to protect the interests of the investors, and maintain the overall health of the financial system. Next, how does RBI address challenges related to non-performing assets in the banking sector? Answer, the RBI has implemented policies and frameworks. It has created NPA reporting systems to monitor and manage the NPAs of the banks. It also supports the banks wherever it is needed, ensuring the health and stability of the banking system and keeping control on the NPAs. Next, discuss the implications of changes in the repo rate on the bond market in India. The answer, the interest rates and the bond prices are inversely correlated. Changes in the repo rate impacts the bond prices. An increase in the repo rate brings a decrease in the bond prices, and a decrease in the repo rate brings an increase in the bond prices. Next, which PM of India was also the RBI governor? Answer: Prime Minister Manmohan Singh. Next, in which year was RBI established? Answer: the RBI was established on 1st April 1935 and its first office was in Kolkata. Well, learners, we have completed the second set of 20 questions, which was specific towards RBI. And as committed in the description, I have put the next set of aptitude test. Kindly practice that test. The questions and answers both are given in the link. And yes, finally, if you love the content that I'm creating, please like and share these videos so that others who need help in cracking a banking interview will get the required help. And to get more updates on banking, investment banking, personality development, kindly subscribe to my channel. All I can say is keep learning, keep growing. Thank you. Namaskar.